A graphics card giant. This is Nvidia. Currently traded on the Nasdaq with a ticker symbol of NVDA, and I'm sure many are very familiar with it when it comes to the likes of their GPUs. I'm sure over the pandemic, especially when crypto mining really took off, you couldn't get a GPU, and it was mainly either AMD or Nvidia cards being used. There was a squeeze, a lot of publicity, so I'm sure many have heard of Nvidia. They also have had the same CEO from 1993. That is extremely impressive, Jensen, to say the least. Now, they aren't particularly a massive dividend stock, yielding stock. Dividend growth, they've grown their dividend per share consistently over the last 10 years. That's true, but fortunately, its yield is 0.11%. That is very low, the lowest on this channel by far that I've ever featured. There's a lot more to this stock than meets the eye. Had you bought them back in the likes of March 2019, you'd have paid $39. You could have sold them at a height of almost $329 in November of 2021. Now, they've had a wee bit of a fall since then, going as low as $112 in October there, and they rose again back to about $140 as of Christmas. Now, they employ 22,000 employees, and they're based out of Santa Clara in California. Now, let's step on over to Simply Wall Street, and we'll do a wee bit of a deeper dive into them. Current market cap, $347 billion. Now, they are down 52% on the last 12 months. As I was saying, they started off the year back in January there of $301, and it has been painful to watch them drop almost to $141. Now, some investors, may see that as an extremely bad thing. Some people see that as opportunity to add it to the portfolio. Obviously, a lot of people are hedging more on the growth side of things instead of just the dividend. But the dividend, and you never know, in the next 5 to 10 years could come out to be a major player in Nvidia stock for sure. Now, let's see their Snowflake. It's one of the most unique ones I've ever seen. An extremely financially healthy company with huge potential. But 0 out of 6 in valuation, 0 out of 6 in dividend, and 2 out of 6 on past performance. Earnings are forecast to grow 27%. As we know, Nvidia, one of the primary things they engage in is GPUs and semiconductors, and that makes them an extremely big player in the market internationally, and especially with United States, Taiwan, and China. Now, let's go down. We can see there's some insider selling over the past 3 months. I would say with the fallen stock price, a few people maybe decided to jump ship. We'll have to have a look at that. Profit margins are lower than last year, but last year was a near record-breaking year, if I'm not mistaken. Let's go down and see, who are their competitors? Broadcom, Qualcomm, AMD, Advanced Micro Devices, and we have Texas Instruments as competitors. All of them are pretty close in market cap, although Nvidia surely beats them out. AMD by almost 3.5 times. We can see in terms of news, an awful lot has been happening for Nvidia. Let's see the wee green dividend thing. They were to pay their next quarterly cash dividend at 0.04 cents per share. Nice. 0.04 cents for, a near $300 stock back then. That's pretty impressive to say the least. Now, let's go down. Their pay ratio is 58.3, which is massive. Really, really a massive gap on earnings and revenue to overall market cap for sure. Now, we can see here they operate in a 57% gross profit margin. Their net profit margin is about 20%. And we'll see how that has continued later on in the video. Pay ratio sits at 7%, which is one of the lowest I've ever seen. So definitely they have lots of free cash flow and room to grow that certainly into the future. Obviously, with it being low, a lot of money is obviously being reinvested into the business. Yield of 0.1. Right. So valuation, we've seen the pay ratio, and against competitors, they are definitely one of the highest when it comes to payee. Definitely. Let's go down and see on a discounted cash flow model. Obviously, based on future cash flows, they're 25% overvalued. Fair value of $113. Now, into the new year, we will have to keep an eye on Nvidia stock and see where it goes. Will it reach this price? Not entirely sure. We'll definitely have to see. And we'll look at an alpha spread later to see intrinsic value, how it lines up with a DCF model. Of course, it is a model, so take it with a grain of salt. Now we can see into 2023, their forecasted revenue and earnings are meant to drop. However, going past into 2024, they're meant to actually increase by nearly 27%. If the analysts are right, that, obviously is going to be a great time for Nvidia. They do have quite a lot of free cash flow as of October 2022 of $4.8 billion. The industry and market as a whole is forecast to grow, but the company itself is forecast to nearly double growth of both the industry and market. Now, in both earnings and revenue growth for that. Down to past performance, we can see back in 2016, they were making about $614 million in earnings and $5 billion in revenue. Their best year by far was 2022. Not for earnings. Earnings was actually it was in January of 2022. So for that previous quarter, where they made off like a bandit with $9.7 billion in earnings. What about free cash flow? Has it increased? It's been quite steady with them. Operating expenses, now they have been growing year on year as well. The semiconductor business and making GPUs is a massive, massive endeavor. Those factories cost massive amount, billions, to not only open, to just develop and get started off. To get them off the ground, you're talking billions. But the US and China and Taiwan, I think they're pouring a lot of investment in as well to get production up. I'm sure you know all the chip shortages. I think it was TSC, Taiwan Semiconductors. They were certainly having a wee bit of a turbulent year with their stock price. I'll be looking at them in a later video as well. We can see financial health, they score 5 out of 6. They have $23 billion to $6.8 billion in the short term, and long-term liabilities 17 to 12. Going on down, we can see they have a 51% debt equity ratio, $10 billion in debt, well, almost $11 billion, and in terms of cash, they have more cash than they have debt. So that's obviously a great thing to see. Operating cash flow, it's well covered, their debt coverage. Interest coverage is also well covered by a 74 times coverage. Nice. Okay, dividend 0 out of 6. Not notable, not high, not stable, not growing, not even covered by earnings or cash flow coverage, which I'm very surprised at. As you can see, the wee turquoise line is indeed their dividend per share, and it has been growing. If you had bought Nvidia shares back in 2013, it was actually a yield of 2.3%. Quite modest, definitely not the highest by any means, but over the years, as the share prices rose, the dividend yield has dropped to a measly 0.1%. Almost in February there, it was basically 0.06%. Crazy. Okay, so they're definitely not using a lot of their earnings or cash. Now that is good. That means because a lot of cash flow is retained, they can reinvest that into the business. And for a lot of people, if there is a dip in their share price, they may see that as a fantastic opportunity going into the future, because then, as the industry matures, maybe they can see the returns through dividends. Average management tenure, 13.9 years. CEO's been there for almost 30 years. That's, again, from 1993, Jensen has been there. And imagine he would be, is he the co-founder? He's the co-founder, yep. So the management team, extremely experienced, without a doubt. We can see there's been a lot of selling off in the past 12 months by a lot of individuals. It seems Mark Stevens has sold off quite a lot as one of the individuals. So what is he? He's a member of the board, and he's also an independent director, right? We'll note that. Institutions own 65% in Nvidia, general public at 30%, and individual insiders at 4%. I'm imagining, would that be Mr. Jensen himself? Yep. Jensen is there, 3.5%. Vanguard, BlackRock, and FMR LLC and State Street are the top 4 above him. Currently, they employ 25.5k employees. Sector, of course, semiconductors. Right. Let's jump over to Dividend Max. If you had 100 shares in Nvidia, which would be would cost you about $14,000, you'd have got a previous payment of $4 for 100 shares. Yeah, they're definitely not on the dividend growth side of things just yet. I think they've definitely about a couple of years at least to prove if their dividend is going to indeed be anything worth investing. I'm sure in a lot of dividend growth portfolios, maybe they have a place at a small percentage, maybe. Obviously, I don't give financial advice, but I'm not too sure. Let me know, is it in your portfolio? Do you have shares of NVIDIA? Honestly, if you bought them at the $329 mark, ouch. Well, maybe they're in it for the long run, I suppose, but that is, if you had those shares pre-2019, you'd be laughing right now. Even if you didn't sell, you'd still be laughing. Let's jump over to Alpha Spread and see where they sit. 38% on over-evaluation. Best case, what does the best case come out at? 7%, $131, right? Worst case, $68, 52% overvalued. So that is something to obviously bear in mind. It's a different model, the DCF and relative value smashed together to give you an average, and it's called intrinsic value. Yeah, interesting to see. But let me know what you think of NVIDIA as a stock. Is it in your portfolio? Is it in your watch list? It's certainly on my watch list for the tech companies for sure, but I haven't. I don't think I pulled the plug yet on actually buying any NVIDIA stock. But never know. We'll have to see how things change in the coming years. Definitely. See you all in the next one. Thank you.